Hi, this is Amur with the Bulletin Board Heroes here at Vox Markets for Friday, the 27th of May. Starting off with Angle, where it always looked as though we could get a decent result on the technicals. We had that line of resistance around the 140, 145 level, which looked like it was a long way away. Obviously, we missed it once earlier in the month, but second time lucky. There is a line of resistance there from back in July last year, so that's capping the price action towards £1.65. Be interesting to see whether we can find support around 140 to 145. Or maybe just below that, as that was the old resistance area, 1 year resistance area. So it'd be nice to see that come in as support. Both the 50 and 200-day moving average is currently rising now, so we're about a week or two away from a golden cross. And obviously the run up to a golden cross is historically the best part of the cycle. So let's see if above 140 we head up to 165 or that area again. On to a stock where it would appear that Turkey's voted for Christmas in terms of the deal on the table. Interesting to see that the shares have actually started to regroup. We've got a U-shaped reversal there, which is looking quite healthy on Amur, and broken that neckline resistance, the 107 level, which was just that little peak there. Above that, looking for the 50-day moving average area as a best-case scenario around 1.5 pence, but perhaps don't ask me what scenario on the fundamentals that would have to trigger to get the shares up there. But interesting that we've had a base here for May, higher low versus March. So if you didn't know anything about the company, it would look encouraging. Moving along to a stock which I haven't looked at for a long time, Bluebird Merchant Ventures. And here we've got the phenomenon of a rising 50-day moving average near the lows. We've got a bullish divergence line there as well from December. So it looks like on this occasion we might recover and stay recovered. A line of resistance there around 2.6 pence. So that needs to be conquered, as does the 200-day moving average at 2.44, but at least we do have that rising 50-day line, and we were strong enough not to need to test it. So that does suggest we could head up to around the 3 pence area over the next month or 6 weeks for Bluebird, while we hold above 2 pence at the 50-day moving average. Onto a stock which obviously pulled the rug from under the bulls earlier this month. The only good thing you can say, well, one of the good things you can say perhaps, is that the shares did actually bounce off the support line, the 1 year support line that they should have done, which was around 12.55. That was also the low in January as well. So at least from a technical perspective, things have added up. What we'd like to see now is a clearance of the 200-day moving average, currently rising around £14.16, and even better would be an end of day close back above the 14.42 level, which was the initial support earlier this month. So 14.42 would hopefully then confirm the shares are ready to return on the upside and maybe retest the area up to the 50-day moving average near £18. All of that over the next month, and all of that while we have no end of day close back below the 12.50 zone. Was good that the shares did at least bounce off a very oversold state, the most oversold they were or they have been for a whole year. On to a stock which I was covering earlier in the week and recently. It's i-nexus. Here we've got both the 50 and 200-day moving averages looking like they're going to go into a golden cross over the next week. Nice little bull flag here resting on former resistance. So the former resistance around 6.7p, something like that. Above that, we're looking for 12 pence by the end of next month. So looking quite interesting there. Another stock which has had a good start on the stock market is Mila. We had the big break higher at the beginning of April. Haven't really looked back since. Rising trend channel there from February. Floor of the channel around the 5.25 pence area, and above that we're looking for the top of the channel, maybe as high as 8.5 or 9 pence by the end of July. So a nice simple looking chart there, steady, relatively steady looking chart there. Not so steady with Mode Global in the recent past, and it's normally sort of quite painful to look at this one, but we've got some sort of nice noises in the RSI window, so a couple of bounces off that support line. Yesterday, a decent hammer type candle, bear trap below the 7 pence level, and we bounced quite well from there. What we'd like to see now is an end day close above 8.3 pence, which was the recent resistance. If we can do that, it would be up to 10 pence, which would be, I suppose, amazing, but we do have that bullish divergence there, bullish divergence line, and that does provide the encouragement for a potential move back towards the 10 or 11 pence area over the next month. Moving along to another stock which has been battering the bulls in the recent past, Midatech Pharma. Here we've got the bullish divergence there, so it's sort of in the same kind of bracket as Mode. Really punched the bulls hard. Flat price action there near the lows, which is, I suppose, encouraging, around 9.7 pence. And while there are no new lows, we're looking for the 50-day moving average around 12 pence as an initial target. So a potential turnaround there. And that's really off the back of that bullish divergence with the lows there in the last week, but the RSI actually higher, so that is encouraging. On to Petrotal, which is on a tear at the moment, looking very nice with the latest breakout. Gap closed buy signal last week around the 40 pence level, and now we're shooting up, heading towards that line of resistance at the top of the August trend channel at 60 pence. Hopefully by the end of next month. Can't quite remember whether I covered this recently, but I think I was saying that the shares of Pires were at their most oversold for quite some time. The other good point is that we've had a bear trap rebound as well, so bear trap from below the December support at 4.6 pence. Above that, one would be looking for a target towards the 200-day moving average, maybe 6.5 pence over the next few weeks, but at least it seems that Pires is finally bottomed out with a bear trap. Speaking of bears, a company which is hit by the bears on an almost incessant basis is Tern, and interesting now that we've got a bullish divergence line here. We've broken that line of resistance there from back in June last year, around 13 pence, we'll call it 14 pence. And above 14, we're looking for 18 or 19, even if the shares then fall away after that. So it looks rather more encouraging there for Tern than it has done for quite some time. That's it from me today. More updates over the weekend.